Hello traders, welcome to KineFX Academy YouTube channel. My name is Akinla King. I am the lead instructor. So guys, in this video we are going to teach you this simple strategy, and it is not that simple though, because it requires some price psychologies on how to cash spike successfully on boom and crash. That is how to get a price level on boom and crash. So that is what this live session is. So we are going to do that together. If you also see an opportunity in the market, we are going to also trade. We are going to trade that live here. So guys, um, as you all know, my name is Akinla King. I am the lead instructor from KineFX Academy. So guys, if you are joining the live session now, so I welcome you to this live session. So guys, we are going to start with boom 300. You can see on my screen. So there's some things we are going to take note when trading with this strategy. First of all, is dictating the market trend. You understand? So when doing anything in the market, even if you are trading the market normal or you are cashing spike, so you must first of all dictate the market trend. You know, this strategy is basically for scalping. You understand? How to cash spike in 1 minute time frame. That is what this strategy is basically for. So now we are going to find opportunity in the market so that we can trade it live on this live session. So you can see that the reason why I go to the boom 300 market is because boom 300 is in a spike trend. So this is how to dictate a spike trend when cashing spike on boom and crash. So first of all, you must first know where the spike is taking it. You know, when boom 500, when there's spike in boom 500, that means the market is buying. And when spike in boom in crash rather, it means the market is selling. Is buying is actually going up. That is how I'm explaining this in layman language because of the beginners. So you know, when something is buying, that thing is actually going up. So and when something is selling, that thing is um going down. So after dictating that on a higher time frame, the recommend time frame is 30 minutes time frame. You understand? So we don't want to go fast so that we can actually pick out different opportunities in the market. Normally I don't use trend line when analyzing market. This is what is actually at the back of my mind. I always see this price movement at the back of my mind. I always tell you that when the price is moving in uptrend, is actually moving in uptrend. Sorry, impulse move retest, impulse, sorry, let me delete that. Price always move in a zigzag manner. When going up, if you see something like this, impulse move retest, impulse move retest, impulse move retest, impulse move retest. So the confirmation that this trend is going to continue is when this level is got broken, this high, because the market will form a high to form a low high, then form a new high. After creating a new high, that is what guarantee you that the trend is actually continue. But when the retracement is happening, you can actually see it when that the market is going to continue. But once you can confirm this level got broken, it means the market is going to continue buying. The good thing about trading boom and crash or any synthetic indices market is that this market respects price actions a lot. So there is no much life event that have not at all. There's not even there's no more. There is no life event that affect this market, unlike currency pair where different news or events will push price anyhow in the market. So that is why most traders trade synthetic indices, because it's a straightforward market and very volatile market. So with what I just explained on how to get the market movement, you can see this on the chart that the price for a high here, there's a retracement here. The price create a new high here, then there's a retracement here. Price create a new high here, there's a retracement here, and it's forming a high here. So you should be able to see that on my screen. So there's a I here. So that is what I just explained. If you have this at the back of your mind when analyzing markets, trust me, you are already beating the market. So the rest for you is just to get an entry. You understand? So this is same thing we are going to use to catch spike in the market. This is boom 500. Let's assume you get into the market and you see something like this. This is what you should go for. You understand? Your area of interest is, so I'm going to use this to explain. Your area of interest is this retracement. You understand? So when you see that there's an impulse move and there's a retracement, have it in back of your mind that you want to catch spike. That is, you want to catch spike on this particular market. So after have it in back of mind and you detect the trend of the market, so that is what you are following. If you find this to be a downtrend, to be on downtrend, don't bother to say you want to catch spike. Let us assume you open your chart and you see something in this form. Please don't bother to think of catching spike in the market. You are only interested, that is on boom mode. So what I'm saying is basically affecting the bull market. So if you open the chart, if you open any bull market and you see something like this, that the market is moving up, so we are going to actually go to spike market to explain in spike chart. So but now we are using the boom 500. So now after detecting a trend like this, at the end of this retracement, this is where you your area of interest, and you see this retracement. So you will just put your trend line. You will make sure you pick, because when trend is retesting, you should be able to see something like this. This straight line will also form in this manner. This trend line will also form in this manner. That is impulse move, retest, impulse move, create a low, form a low high, create a low, form a low high, create a low. So this is how this straight line is also appear on the chart. So let's find out on the chart and let's see if I'm lying. So this, you can see this, it form a low, it form a low high, it form a low. You can see what I just explained here. This is what exactly happening here. You have already get another thing in the market after detecting the general trend. So I call that counter trend. You understand? I call that counter trend. So how do you enter the buy? What you are doing is, this time frame is just to analyze. Your entry time frame is 1 minute time frame. So we are catching the spike on 1 minute time frame. So we have done all this analysis on 30 minutes, right? So there's still one thing remain to do under this time frame. So after detecting this counter trend, then you will still find a trend line to pick out the eye you can see. Then what are you using these eyes for? You are waiting for the breakout of the eyes to happen on 1 minute time frame. Once you can see the breakout of this trend line, of this counter trend on 1 minute time frame, then you should go for buy immediately, start cashing spike. So let's pick out this on this reshard so that you can be more clear to you. So you can see I can pick this eye. You can see what I just explained. You can see this. There's a retracement and it's formed like this. So how do we trade this? Let me leave it like that. Another one here. This is what I just delete, right? Okay. Another one. It's happened like this. So you can see another one like this. So what are we going to do? I say we are going to find a trend to pick the highs of that counter trend, then go to 1 minute time frame to find the breakout. Fine. Let's use the immediate one. So we are going to use the immediate event in the market. Okay, so sorry for the break. So we have picked the counter trend already, right? So we should just bring out the trend line on this immediate event. Let me zoom that out so that it will be well clear. You can see this. So bring out your trend line, then pick the eye, just pick it like this. Now we are going to 1 minute time frame to find this level. We are going to 1 minute time frame to find this what we just pick here to find it on 1 minute time frame. So guys, let's quickly go to 1 minute time frame and see and find that line on 1 minute time frame. Okay. Boom. So let me leave the zoom. Fine. Fine. Very, very good. So you can see the trend is well clear on this 1 minute time frame. That is very perfect. You can see. So there's a two way to enter this market. You understand? So when seeing a spike break this trend, you understand? So you will enter from the end of the spike. That is, you will buy from here. Then your stop loss is going to be at the beginning of the spike. You understand? You know, stop loss work when cashing spike. It's very, very works when cashing spike. That is why I love cashing spike because it's once it comes to risk management, it happens to appreciate the risk management, not like the other one that spike can just push your stop loss to its destination. That is not happening when cashing spike. So you just enter the trade at the spike that got it broke the trend line. So you just put your buy position here, then this is your stop loss. The beginning of the spike is going to be your stop loss. You understand? So that is where your stop loss is going to be a few pip below the beginning of the trend line. And if you can see, the stop loss has not hit even till now. You understand? So and meanwhile, you have got more than 1:3 trade here. You can see this is the high of the price is even more than 1:4. You understand? So another way to catch this spike is waiting for a retracement after the breakout of this. After you have find a clear breakout, you know, it's good to confirm if there's still going to be spike. That is, after confirm one more spike, then you wait for a retracement to happen to actually come back to the trend line. Then you enter for buy. So apart from using trend line, there are also some moving average that can perform the duty, but I won't go into that moving average in this video. So I'm going to stay with this trend line. So if you see any breakout and retest, then you continue cashing the spike as many as possible. It will happen. Sometimes the spike may go very, very long, and which we make enough money from it. You understand? So but so far you have the stop loss working. So after you see that the market has been in profit, you should be able to protect your capital, then move your stop loss to break even. You can bring it to like this level. If you have protect your capital, this won't send you out in loss. You understand? Even this, I'm very sure you'll have take part of the profits to this level, because this trade is over 1:4. So guys, that is one example. Let's go back to the 30-minute time frame to also find if we can get another example, just to make this and what I'm explaining very clear. You understand? So this is another video too. So just bring out your trend as I've explained. So just draw it like this, then go to 1 minute time frame to be. So guys, let's find the the trend on a 1 minute time frame. Let's go and find it. This is the first one we do now. So let's go and find the second one we just draw. I think we are here. So this is the second one we are um actually draw. So you can see that this gives us two entry. This gives us two entry. You understand? So I'm going to explain. If you use the first breakout, like you enter the buy from this level, you bring out your buy position, you enter the buy at this level, then put your stop loss here. So there's something I always explain, that when you are trading, you understand, first way to trade safe in the market is going for 1:1 first. That is, you should be able to cover your stop loss, what you are risking. You should be able to get it back 100% return on what you are risking, then go for more. You understand? So that is why it's very, very important to go for 1:1 first. Then you can later proceed in seeking for more profit. So you can see what happened here. You can see that 1:1 happens. 1:1 happen, then price come back to hit your stop loss. You understand? So assuming you have take your profit at 1:1, you have secured some profits, you won't complain of the stop loss hit. You understand? You will see that the market has been in profit for a while before the pullback. That should be some important level. So I have actually, maybe I'm going to also explain that in this live session, when you can think of a pullback. Even when cashing spikes, some level you should pick out, so that when the price gets to that level, there's going to actually be a pullback no matter what happened. So um it's also, I don't really understand your question, like which is best forex derivative. I don't understand. So derivative is a broker that offers synthetic indices. So they also offer currency pair. If you verify your account with them, you'll be able to have access to their currency market. But if you don't verify your account, you get limits to only synthetic indices market, and they are the only one that offer boom and crash volatility index. So they are the only broker that offers that. So I don't really get your question on this part. So let's quickly continue, guys, because I'm going to. So you can see that. So you can see on this chart that after the stop loss hits, there's something happen again. You can see that there's a breakout again. So you can see the breakout happen to be here. Then put your stop loss at the beginning of that spike. You can see that you have been in profit, a lot of profit. You can see till now the market has refused to come back to that stop loss. You understand? See, you have see how many ratio. See how many ratio you will have successfully secure. You can see 1:5. You can actually see that. So you will have secured a lot of profit. You understand? I know you will have take part of the profit actually. So guys, caching spike is very simple, and how to dodge it. When you are trying to escape something, when you know when something is where it's going to happen, even if you are trading normal, you should be able to know how to dodge it. So far, you have already know the levels, certain level that okay, fine, this is this is going to cause spike, so you should be able to escape it. So this can be used in a two-way. That is, after knowing the normal way to do something, you can turn it other way around to also use it for yourself. So let's quickly check the crash market before I end this live session. Let's go to 30-minute time frame. So you can see this particular market is actually ranging. So these are the time you are not expect to trade no matter what. So with that strategy will fail you woefully in this type of market. When the market is raging, there is no any specific direction of the market, so you are advised to stay out of the market during this period. So let's say other crash market, if there is going to be anyone, let's check crash 500. I just want to use the immediate because when I go far back testing, so it's going to add for me to actually pick on a 1 minute time frame. You can see the market, the crash 500 is on downtrend. The market is spike is happen. So with what I've explained, you can see though here the market started ranging here, so it is not pure here, so we are not advised to trade here, but we should be able to make use of this. So let's go to 1 minute time frame. You know, downtrend now. So you are trending the breakout downward. The other one is upward. So let's go to 1 minute time frame to actually find some entry. I believe by now you should be able to um know how to beat the markets well when trading with when cashing spike in boom and crash market. So let's find that counter trend. I think I get it here. I get it here. So as the strategy said, we enter the trade from um the immediate spike. Let's assume you got this spike immediately it happened, so you should enter for sell at this level. You understand? So then your stop loss is here, so you can actually see how massive the profits you will have secured. You can see you can see how massive the profit is. You understand? Till now, it has not come back to the stop loss. You understand? So that is the first way. So the second way, if you fail to enter at that level, that the second level happen within the 1 minute, so you should be able to enter from here, just that your risk is going to high actually. But once you are sure with the strategy you are using, you should have the confidence of getting your risk back. You should first secure the 1:1. First, get your money back in 100% return. Then after that, go for more. That is how to trade safe. Get your money back. What you are risking, you should be able to secure that back 100% return before seeking for more profit. You understand? So if you are able to do that, you will even be more confident in the market. Like you'll be more confident to go for more profit in the market. But when you are yet to take any profit, because the market can anything can happen, the market is not sure of anybody. What we follow is these strategy patterns, analyzing markets, everything. So we can actually say, okay, fine. Oh yeah, spike should happen. No, no one can say that. We can actually predict the market with the analysis we have. You understand? So that is what that you should know how to secure your profits. 1:1 is very, very important. Know how to get your 1:1 back first before anything. So guys, I'm going to end this live session. I wish you happy trading. Always trade responsibly. If you are new to this channel, please click on subscribe button, and if you're a returning subscriber, I welcome you. So guys, don't forget to on the notification bell so that you won't be missing any video dropping under this channel. In this channel, we do several things on forex trading, synthetic trading. So guys, the several strategy is being dropped on this channel every blessed day. So we drop different strategy on how to trade or cash spike on our scalp, boom and crash. You understand? So and how to trade forex successfully, forex for beginner, price action, indicators, technical analysis, how to trade with fundamental analysis, that is how to trade with the news. So and also how to use sentimental analysis. You know, after focusing on technical and fundamental, and you neglect the sentimental analysis that actually affect markets a lot. You know, we must be able to know much about price psychology. It is very, very important. We should be able to know how banks trade. So that is what we did under this channel. If you are yet to subscribe, just click on the subscribe button so that you won't be missing all the juicy content dropping under the video that we're going to escalate your trading career, that is going to help you to make enough profit for yourself in the market. You understand? So the only thing we can benefit from you is just getting a like, share, and comment. Just your review on the content you wash like on the strategy I drop. So if there's any comments, serious, I will attend to it. So my contact address is under the description of this video if you want to contact me for anything. And if you have any question, drop it under this comment section. I'm going to attend to it. So guys, I wish you happy trading and always trade responsible. Don't trade with any money you can't afford to lose. Bye.